Hello, we're live here. Temporary setup. We haven't added much yet, but we got this going for today. So, hope everyone is having an amazing day so far. And if you haven't been having a great day, let's hope that that changes after this call. We had a really good session. We had a really good European session earlier today. It was fire. So, anyone who's hopping on, for this one, it's gonna be good. I sound different because it's echoing like crazy in here. That's why there's not enough what's it called? There's not enough things to cancel out the noise. Maybe I sound more like a radio. But how's everyone doing? Let me know in the chat. How are we doing today? Let's get some more people on. Do me a favor, drop the link in the chat. Okay. Daniel wants to help out, huh? Come up to the all the way up here. Pushing through. Good. Hey, look, no matter what happens in your life, gotta keep going. That's why we're here. That's why we're here doing what we do every single week. As you guys know, every Tuesday, 7 p.m., we're here doing this training. New office, new place. Yeah, new place. If you guys don't know, um, we're gonna set up this place really cool. You guys are gonna see some cool stuff the next couple of days. I've been busy the last couple of days just moving. So that's been a whole like I've never moved before, and I've never moved to like a condo specifically. So having to go up the elevator takes like your whole day pretty much. Yeah, we live in lavish now. So you guys will see more of the place. You know what I mean? You guys will see more of the place soon. But today we're gonna be going over some training, some forex training, okay? Who is in here? Let's see some cameras. I see Kev, Caleb, Nico, Daniel, Michelle. I want to see some more people with cameras on. I want to see that camera on culture in this chat. Is it annoying anybody that it gets dark so early now? Like, is anyone feeling it? Like I was it's getting dark way too early. 5 p.m. It's already nighttime. That's not a vibe for me, to be honest. I don't like that. Way too early. Is that Mia? Hello, Mia. What's up, champ? Who else we got here? I guess that's it. Okay. Oh, it's messing me up. Yeah. Don't fall into seasonal depression. Trust me, I hate nothing I hate more than it getting dark early, but we gotta stay strong. We got some business to do. Finish working in the dark today. Yeah, that's why November is a sad month. Yeah, November, I guess for that reason, but we're gonna turn that around. So I want to go into some stuff, okay? You guys know a bit more than I'd say some of the Europeans because they were like a whole new team. Um, we're gonna go into some in-depth stuff for risk management. That's what I did in the previous call, but because you guys are a bit more advanced, you guys know a bit more, we might go into some other stuff after if we have time. But let's get into it, shall we? Who's new, by the way? If you've been in the team for less than 2 months, drop new in the chat. Drop new in the chat if you've been here for less than 2 months. By the way, we had a lot more Europeans on the call. North Americans, we gotta bring some more people on these Champions U calls because the Europeans be crushing y'all. New Daniel, Hannah, Michelle. Michelle, welcome to the team. Um, welcome Daniel. Yeah. Is it Angeli? Okay, welcome. Shira, welcome. Okay, so I'm rebranding. Oh yeah. Michelle joined yesterday. So this is what I've heard at least. This is what I've heard. So let's get some more people in here. All right, so we're gonna go into it. I'm gonna go ahead and share my screen. We're gonna go into some examples of some alerts. I want to go into this because I've been getting a lot of questions recently about risk management, and I feel like you guys know everything you can about technical analysis, and you guys know what to do, what patterns to follow. This is stuff you can go into the university and Market Pro anyways, but with this kind of stuff, I want to make sure you guys have it down. Because if you don't have it down, I don't care how good you think you are at trading, you're gonna lose money. Okay, you're gonna fall into the trap of losing money over and over again. And the biggest problem that I see with retail traders in the beginning is their inability to actually calculate risk properly. That's something that's really big. So I want to go over that with all of you. And I know Edwin covers this a lot, but I want to go into it because I think a lot of you will need this. And we'll see if we can add anything after. So I'm going to go and share my screen so y'all can see what we got going on. We'll go into some different examples. But let me know if you guys can see it in 3, 2, 1, go. Okay. Champions University, November 7th. We're almost at the end of the year. I do want to say this and I'll start off before we get into the training and tell you guys, look at the goals that you had for this year and ask yourself if you've gotten close to it. Okay? There's one of two answers to this question. Answer one, yes, I've gotten close to my goals and I might have even hit it. That's answer number one. Answer number two is I am not even close to where I thought I would be. Okay? If you are answer number one, congratulations. Keep pushing. If you're answer number two, you got approximately 40 days, 43, 44 days to change that. Just because the holidays are coming around doesn't mean the year is done. Trust me. I hit Diamond Ambassador on Christmas. On Christmas. No joke. So y'all can push regardless of when it is. Okay, so let's get into it. Risk management. We're going to only go over three things here, but these three things tend to be the most time consuming. So number one, we're going to go into our lot size and allocation. I've been getting a lot of questions on what's a good way to remember, what's a good way to, find a trend with the lot sizes so I don't have to calculate it. We'll go into that. Number two is going to be your risk and reward in pips. And number three is going to be the dollars won or lost. On a scale of 1 to 10, where do you guys think you are at with risk management currently? On a scale of 1 to 10, how good do you guys think you are in risk management? I'll see some honest answers. I see a 2. Love the honesty. I see a 6. I see a 5. 2, 4 to 5, 5.5, 5, 1. Okay. Let's see. So the first thing we're gonna get into, do you guys know what the formula is for lot size or your allocation number? It's the same thing. I want you guys to write it down. But in the meantime, I want to describe what it is. What is your lot size? What is your allocation number? This is a number that proportionally measures potential wins and losses depending on your account size. That's what a lot size is. Okay. Now, if I'm someone, and by the way, actually, hold on, who wants to be co-host and help me let people in while I'm doing this? Okay. Daniel was quick with that. Okay. Here you go. If you see anyone in the waiting room, let them in while I'm doing the call. Appreciate you. So it's a number that proportionally measures potential wins and losses depending on your account size. Okay. So now that I know what this is, I need to figure out what this number is going to be. You guys know MetaTrader, when you're entering your alerts, there's that 0.01, 0.1, 1.00, plus or minus, whatever. So this is something that I want you guys to pay a lot of attention to. Okay. This is a simple formula. And the formula you don't have to know, but it would help if you knew. So your lot is equal to the account size divided by 10,000. The account size divided by 10,000. So I want 3 account sizes from you guys. You guys give me 3 different account sizes that we can measure. 3 examples. Drop it in the chat. We'll pick the first 3. 50K, 1,500, and 50. Okay. Y'all going big, huh? Let's do non-funded account sizes. Like what someone would start off with a beginner account. Okay, 1,500, 3,000, 1,000. Okay. That was my fun. 250. Let's go for a smaller number then. Let's do 3. 500. We'll do 1,000. And we will do 3,000. Okay, so 500 divided by 10,000. 1,000 divided by 10,000. And 3,000 divided by 10,000. 500 divided by 10,000 is 0.05. 1,000 divided by 10,000 is 0.10. And 3,000 divided by 10,000 is 0.30. So these are the lot sizes we're dealing with, okay? Just so you understand. That's where we get the numbers from. I told the Europeans, and I will tell you guys as well, we're going to make a chart with your lot size, the account size of the corresponding lot, and the corresponding dollar per pip that you earn for that, okay? The dollar per pip, though, will depend also on something we call contract size, but I'm going to go with a contract size of probably 100, okay? So that way it's kind of just universal for everybody. This is what it means, okay? Now we're going to go on to the next thing, which is now figuring out number 2, pips. Can anyone define this for me? What is a pip? What are pips? Anyone who's trading Forex, anyone should know. There you go. Any more answers? Y'all agree with Mia? Yes, no, maybe so. Yeah? Okay. Points and percentage. What this also means, this is a perfect answer, by the way. What this also means, it's your smallest unit of measurement in Forex. This is important because typically it's a 4 decimal, but it has exceptions. And that's what I want to get into now. Because we did number 1. And this is all going to tie together. And those of you that have been on my trainings before, you guys know how this is going to tie together. For those of you that know what I'm going to talk about, and you know everything, you are a lot better at risk management than you think you are. Maybe you know a lot more than you're applying. Remember, there's a disconnect between your knowledge and your application. This applies to the business too, because I know a lot of you that I'm on the call with right now, you're building a business too. So if there's a disconnect in the knowledge and the application, you're never going to see success. This applies with trading and it applies with the business. You could know everything. And I know people on this team, and some of you know who you are. You know so much about iGenius. You know so much about the services. You know how to answer pretty much any objection, but you have not seen the results that you want. And the reason why is because there's a disconnect between what you know and what you're doing. And so what you're doing has to match up the level of knowledge you have, or else it's just knowledge on ice. Right? You have your knowledge in the freezer. It's gonna get ready. God knows when. You're gonna cook that medium rare, preferably. But it's you know you have all the ingredients. You know the recipe. You know how to make it. You just aren't making it. You guys understand that? This is one of the biggest flaws and one of the biggest downfalls in most entrepreneurs that we see today. It's their inability to cut that disconnect between the knowledge and the application. So some of you, the reason I mention this, because some of you know what I'm talking about. And if you're not making a lot of money in the market, it's because you probably haven't taken enough time to actually do it. Number two, maybe you are doing it. Maybe you're like not this person I'm talking about. Like you're someone that knows and you apply right away. And you're learning how to present this now to your team. Because the goal of why I teach you this, the goal of learning, you learn with the intent to teach. So when you're learning this, even if you've been on like 10 calls like this, you should always look at trainings like this and know how you're going to explain it to your team in case they ask you questions. This is important for everybody. I don't care what rank you are, how much money you make, nothing. Okay. Like to apply properly. Yeah, exactly. So if I know how to, let's say I'm complaining about money. Let's say I'm really broke as an example, right? I'm working my regular job, making minimum wage, and I'm complaining about money. And I'm like, oh, I hate having to buy food all the time. Like it's so expensive. Uber Eats just drives me insane. All those delivery fees. But I know how to cook. I'm just not doing it. And cooking will save me money. I'll have to invest more time, but it'll save me money. A lot of people in business and trading know what they need to do to see results, but they're just not doing it. Some people, it's not even just about applying properly. Some people just don't apply, period. Right? So that's something that's really important. But I don't want to drift off too much on a tangent. That's something I want you to take away from this training. Points and percentage are the smallest unit of change in Forex. And the reason why we know that is because with different currencies, there has to be a way to measure upward movement and downward movement. And so, like Daniel said, there are some, in most cases, let's just see like the US dollar and the Canadian dollar, you have it being what decimal place? And there's two exceptions to this rule. Interesting. In most cases, Daniel gave you the answer, so I'm surprised no one answered. It's the fourth decimal place, right? If you didn't know, by the way, don't feel any type of way about it. You guys can go into the university, you guys can go into like the market pro and learn all this stuff, right? Um, I'm teaching you guys so that you guys obviously know, right? So fourth decimal place, USD CAD. Anyone want to tell me what the currency is at right now? Anyone want to tell me where the currency is at right now? I see a number. I see 1.37687. Yeah, so Daniel, you're right. 1.38 if you round it, right? So Google will show you 1.38. A Forex broker or MetaTrader 4 will show you this. So this is interesting now because we're diving deeper into the numbers than the average person would. Okay. So in this example, the USD CAD, which number is my pip? Which number is my pip? Anyone else want to answer? Y'all think we're going 8? 888? Okay. If eight's the decimal though, if eight's the pip, what's the 7? So if you guys don't know and you guys are newer, anything after the fourth decimal place, after the, we call it the baby pip. Hey, there we go. It was Rajad, right? You were on the European session too. Good. Good to see you back. Wait, are you in Europe or are you North America? Europe. Hey, what's up? It's 2 a.m. in the morning for you, hopping on double the trainings. I like that. Shout out to you. So the 7 in this case is the baby pit. And that doesn't matter for us. It doesn't. So in this case, right? In this case, we know that the 8 is the pip, okay? Now there's I actually want to ask this first. If it goes from 1.3768 to 137.70, how many pips did it change? How many pips did it change? 2 pips, right? I want to see some new people answer, by the way. I want to see some of the newer people. Because I know who knows the answers. So I want to see some new people now. So 1.3768 to 1.3770 is 2 pips. 2 pips, right? If it goes from 1.3768 to 1.3778, how many pips did it change? Daniel's rolling right now. He's like, oh man, can't answer. All right, 3768 to 3778. How many pips did it change? Oh, we got a couple of different answers. Anyone else? Anyone else? It's 10. Yep, 10. 137.68 to 137.78. If 68 went to 69, that's 1 point. If 68 went to 70, that's 2 points. 2 pips, I mean. If 37.68 went to 37.78, that went up 10 pips. You guys kind of understand? Does that make sense? This is extremely important. I don't even want you guys to even, and a lot of you, by the way, many of you have gotten messages from a lot of you that you want to start a live account. I need you to understand this before you even do that. Okay? I need you to understand this before you do that. So 37.68 to 37.78 is 10 pips. Now, what if I did this? What if I said 1.3768 changes to 138.68? How many pips has that changed now? 100, right? Okay. How about 1.3768 to 1.4? Someone drop crickets in the chat. 137.68 to 1.4. 0, 0, 0. How many pips have we changed now? See, this is where, there we go. 232. Good job. 232. So you get it. So there's an easy way to do this, by the way. All you have to do is cross off what's common from left to right. Okay? Or sorry, not this is sorry, I'm getting ahead of myself. What you can do is eliminate the decimal and just subtract it. So I said 1.4. So that let's just call it 14,000 minus 13,768. The answer would be the difference would be 232. So that is how you do it for calculations like that. Okay. If you don't understand this, sharpen up on it. This is something you guys got to understand. Exceptions number 1 and 2. Number 1, we're going to look at the Japanese yen, in which this case, the currency pair that we'd be looking at, if I looked at as an example, USD JPY, which is one of my favorite currency pairs, probably my favorite currency pair to trade. We look at the exchange rate right now, it's 150.386. Okay. 150.386. Who knows? Again, minus the more experienced people. Who knows what the pip is in this case? Is it the first decimal place, the second decimal place, or the third decimal place? What if I did this? Is it the fourth decimal place? What's the pip in this case? Which decimal place? Second. There we go. Y'all got it. In this case, it'd be the 8. So how about the 6 and the 0? What happens to that? We just ignore it? Yeah, both of them would be baby pips technically. But you'd never see a fourth decimal place on a currency, on a Japanese yen currency. So in this case, it would just be the 6 as the baby pip. Okay. Let's do this again. So 150.38 to 150.39. How many pips has that changed? 150.38 to 150.39. 1. How about 150.38 to 150.4? How many pips has that changed? 150.38 to 150.4. I love seeing different answers. Oh yeah, there we go. 2. Yep. 2. Nico saved himself. Right? 150.38 to 150.4 is 2 pips. You guys got it. Now, what if I did 150.38 to 160.38? How many pips has that changed? One 150.38 to 160.38. How many points have we changed? How many pips have we changed? I love that the only one that got it right was on the session this morning. It's 1,000. Yep, 1,000. Good. That makes me happy. Now you guys won't forget. Good job, Judy. Got it too. 1,000 pips. Okay. The math is mathing now. It's starting to make a bit more sense. At least I hope. And we got one more exception. Okay. This comes in the form of XAU. A common way we see it is XAU USD, which is something against the US dollar. Okay. Decimal out. Yeah. So it would make it easier to see. Exactly. If you just cut off the decimal. XAU USD is what? What asset is that? Gold. Yep. Gold. Who knows the price of gold right now? This is what I see right now. 1969.60. Okay. It changes very quick. So if 3 of you wrote your answers, it'd probably all be different. Yeah, see? That's a real-time change in the market. See? 1976. Damn, what broker is that? Damn. That's crazy. So 1969.60. What is the pip in this case? First decimal place or second decimal place? Angelique says the 6. Rashad says the second, which would be the 0. Nico says the second. Johan says the first. Judy says the first. Damn, we got a nice split. A nice split in here. So the answer is the first decimal place, which is the 6. Okay. So then the 0 is what? As we all know. Wait, well, hold on. What's going on? Okay. The 0 would be the baby pip, right? So if it goes from 1969.6 to 1969.7, what are we looking at? Sorry, guys. I'm getting calls. 1969.6 to 1969.7. How many pips did it change? One. 1 pip. Yeah. 169.6 to 1970. No, the zero is the baby pip. Yeah, so the zero is a no-go. 1969.6 to 1970.0. How many pips has that changed? 1969.6 to 1970.0. The baby pip is always ignored. Yeah, you got it. Always. It's irrelevant pretty much. 4 pips. Yeah, got it. 4 pips. Okay, now what if I did 1969.6 to 1979.6? 1969.6 to 1979.6. It's 100. Yeah, 100. It makes it easier when you eliminate the decimal. That's like I think those of you that are getting it quick, I think you've already kind of subconsciously done that in your head. If you're not getting it, then just eliminate the decimal and do the math as is. So that's my best thing for pips. You have in most cases the 4 decimal place. In one case, it's the second decimal place, which I'll write that down here. Second decimal place for Japanese yen. And in gold, it's the first decimal place. That's what we just did. Okay. So now, as we move on, we're gonna look at a real-time example. We're gonna look at our last delta alert, which I did when it was pretty new. It was a pretty new trade still. So I'd like to see how it turns out now. Still hasn't, maybe it hasn't been activated. I mean, it should have. What's the price now? 1969. Oh yeah, this was activated, I believe. Or maybe no, it wasn't. If they didn't say anything, probably not. So this did go in the direction they expected it, but I don't think it hit their entry area. So there was a trade. I'm going to modify it a bit. It was in FX Pro Delta, XAU USD entry price. We're just going to say it was at 1960.0. Stop loss 1954.0. Take profit 1 was 1965.0. Take profit 2. 1970.0. Take profit 3. 1987.0. And take profit 4. 2000. So I want you to keep this in mind, is that when on the trade itself, if you look at the delta channel, there is no 0.0. It's just 1954, 1965, 1970, 1987. Looks like birth years, right? But I'm adding the 0 to make it easier for y'all. Because you know that the pip is a first decimal place. Because if I tell you to calculate it without the 0.0, it might be a bit tougher for you to picture mentally. Okay? So here's what we're going to do. We're going to calculate pips, and I'm not going to do anything for you. You guys are going to calculate it yourself. So risk and reward. Risk is the difference between the entry price and the stop loss. The reward is the difference between your entry price and your take profit. Okay? So what's the difference between our entry price and our stop loss? How many pips does that change? 1960.0 to 1954.0. How many pips have we changed in here? Now that you guys have a bit of practice, you should be able to handle this. But if you're still confused, hey, it's worth a shot. Guess if you have to. It's better to guess and get it wrong than understand than say nothing and just not learn anything. Just started yesterday. Hey, welcome to the team. Welcome to the team, first of all. Glad that you're on the squad. So if you just started yesterday, this stuff's gonna be very overwhelming, 100%. You're seeing a bunch of numbers. What I recommend for anyone that's new, because there's a lot of you that are new, is go into your back office and watch the first couple of videos in the university. They're like the getting started videos. It'll help you understand at least the basics. But we're going into like this crash course of how to enter alerts. But yeah, I'll rewatch and take notes again. Yeah, exactly. So we have these recorded as well, so you'll be able to catch it after. So the difference between entry price and your stop loss, that would be this. So we're looking at our entry price, which by the way, if you don't know what entry price is, this is pretty much when the trader sends out the alert, because our traders function where they analyze the market all day because we don't want to, right? They analyze the market all day, they find a good opportunity and they send the alert and they send the price that the asset was at when they sent it out. So we know it was 1960.0. Stop loss, okay, 1954.0. The difference is what? Some of you said 6, some of you said 60. The correct answer is 60 pips. So our risk equals 60. Our reward, on the other hand, what's the difference between 1960.0 and 1965.0? How many pips is that? 50. You got it. How about take profit 2? Take profit 2. Take profit 3. Difference between entry price and take profit 3. 170. Not quite. 270. Yep. 1960.0 to 1987.0 is 270 pips. Take profit 4. How many pips is that? This is a big one. 1960 to 2000. So we only get one stop loss in a trade. They only send us one because you can only enter one. So 1954.0. So we're risking in this trade 60 pips. And our potential wins will depend on which take profit we enter. Like I explained to the Europeans, your take profit. Oh, actually, that's a good question. Is TP1 always the best one? So yeah, I was about to answer that. So the take profit you enter, the lower the TP, so like TP1, TP2, but especially TP1, the lower the risk. Because if the trade wins, it's 100% gonna hit TP1. Take profits 2, 3, and 4 are more risky because the market may never reach those points and it may reverse and hit your stop loss and pull you out. Okay, it may reverse, hit your stop loss, and pull you out. So everyone's celebrating wins. Like Mia, Caleb, Johan, they're like, oh, we won, take profit 1, and then let's say me and Kevin are like, oh man, we blew our account because we over leveraged and we entered TP4, right? So let's just say that's the case. That's what happens in real life, by the way. So I would recommend if you're a beginner, just stick to take profit 1. The risk to reward won't always be in your favor. As you can see, in this case, your reward is a bit lower than your risk. But if you're trading on a demo account, I don't care about that too much right now. I just want you to get the hang of entering alerts. And it's almost a 1-to-1. It's not horrible, right? So that's what I would do. take profit one will allow you to live your life passively because you can just enter a trade and forget about it. If you're entering 2, 3, and 4, for those of you that are a bit more advanced, you guys know about modifying your stop loss to your break-even price. It requires a bit more monitoring. So for those of you that are trading and enter higher take profits, just know that you need to be on your phone a little bit more than the people that choose take profit one. Okay? So that's how that works. That's the difference between them. But now we know our risk and reward. So what we're gonna do now is move on to the calculation of dollars so that all of you know what you're winning and what you're losing. All right? Yeah, go ahead. Not the pencil. How do I know when's the right time to trade? Great question. Look at the entry price. I usually have a rule if the trade is within 5 minutes. If it's within 5 minutes, you're probably good. But more importantly, look at the entry price. You want to be within 5 pips, I would say, of the entry. If the trade is if you're entering at more than 5 pips from the entry price, it's too late. It's too late. You want to enter as close as you can to the original entry price. Faisal has a question too. Yeah, go ahead. I don't know. Wait, I don't have to know if it's going up or down. Okay, good. I don't have to know if it's going up. I'm not sure what you mean by that. I don't know. I don't what I'll have to know is the difference. Yeah, okay. I mean, yeah, it doesn't matter if it's above or below. Yeah, I think I get your question. It doesn't matter if it's above or below as long as it's within 5 pips. Okay, so 1960.5 would be fine, or 1959.5. That's within 5 pips. Okay. Tape Faisal's question, tape TP1, 2, and 3, what's the meaning? I'll explain that really quick for you guys. So in a trade, let's just say we're buying and the market is going like this, and we're trying to enter right here. Our entry price is here, or EP, which is our entry price. We expect to buy, so we make money on the way up. Our targets are target 1, target 2, and target 3, and in this case, it has target 4. That's what I want you to think of it, like targets, okay? So you're moving up the ladder. TP1 is the safest because it's the lowest on the ladder. So it's gonna, chances are, if this trade wins, it'll hit that for sure. But 2, 3, and 4 are so high, we don't know if it'll hit that. Okay. It's like if I have an elastic, you guys know what a slingshot is? Where I have a slingshot, I pull it back, let's say I have a rock, and there was 4 targets I gotta hit. Once I let go, I don't know how far it's gonna go. It depends on the wind, it depends on a bunch of things. But I know there's a good chance of me hitting TP1 if my analysis was correct and I'm shooting in the right direction. There's another number though, in case it would go backward. TP1 is always guaranteed. It's not guaranteed like every trade is going to win. It's if the trade wins, what we define as winning is hitting TP1. So every win is a guaranteed TP1. But will every trade win? We don't know. But they do win a lot more than they lose. That's why we hire them, right? The other side is something we call stop loss. Stop loss. Because if we had a case where it went down and it went, you guys know the trading memes where it goes all the way down and then there's like the frog face that, like, you know what I mean, or whatever, like, you know what I'm talking about. So like where it's crying and whatever, like that's if this happens and you hit this point, your account is done, like done. But that's why we give you a stop loss, so we protect your losses. So your losses are very minimal compared to what you would actually be like losing if it went all the way down. Okay. That's what take profit and stop loss is. So now we know your risk and your reward. So your risk is 60 pips, your reward is 50, 100, 270, and 400. I think there was another question, Mia. What happens if it goes one direction and returns the original entry price? Is that a no-go then? That's a really good question. Honestly, that cannot be answered by that is a case by case situation because sometimes if it comes back and it pulls back, there's some traders that say, oh, it pulled back, we get a better entry. But there's some traders that'll be like, it's pulling back now, the market structure is looking like it's reversing and it's going to be a sell. So that is a case by case thing. If it's going just to be safe for my beginners, if it's been 5 hours and you notice the market went really high and dropped to entry, do not re-enter. Within 5 minutes or within 5 pips, and those 5 pips should be probably in the first like 20, 30 minutes. So if you're more than 20, 30 minutes late to a trade, I would not enter it. Absolutely not. But within 5 minutes is your best entry. Okay. Let's go into now the calculation of money. So dollars per pip. What does this mean? This puts a dollar amount to what you guys are doing. Because if you calculate pips, that's great. But what does that mean to Angeli? What does that mean to Mia? What does it mean to Lacey? It depends on their account size. This is why I asked for those account sizes in the beginning. Because now there's a different formula. And what were the account sizes? 500, 1,000, 3,000. So your dollar per pip is calculated by your account size divided by not 10,000, but 1,000. So in one case, I think it was 500, right? 500, 1,000, and 3,000. Divided by 1,000, divided by 1,000, divided by 1,000. $0.5 per pip, which is what? $0.5 or 50 cents, right? $1,000 divided by 1,000, $1 per pip. 3,000 divided by 1,000, it's $3 per pip. So we're about to just do a huge breakdown and put this all together. Okay? Your stop loss with 60 pips. Take profit 1 was 50 pips. Take profit 2 times, we'll do 50 cents per pip times 50 cents per pip. And then same thing. What's 60 times 0.5? 60 times 0.5 is the same as timesing it by half or dividing it by 2. So 60 pips times 0.5 is $30. Not $30 per pip, it's just $30. Why? Because if you guys remember back in school, we cross off the units. We're left with $30. This is off a $500 account. Okay? With a $500 account, you're potentially losing $30. Now, what would the stop loss be if you did $1,000? It'd be 60 pips times $1 per pip. What does that equal? $60. How about the stop loss if you had a $3,000 account? Still 60 pips. That doesn't change. Now it's $3 per pip. 60 times 3 is $180. So, as y'all can see in real time, The more money you have, the more money you lose. But if that's the case, then what do you think happens on the wins? Let's take a look. Take profit 1, 50 pips times 0.5. $25. What if the stop loss? How about the stop loss? 50 times $1. Oh, sorry, take profit 1 on a $1,000 account would be 50 pips times $1. Take profit 1 with a $1,000 account would be $50. Take profit 1 with a $3,000 account would be $150. The more money you have, the more money you make too. So the more money you invest, the more money you lose, but the more money you make. So you see how it's proportional to the account. Remember that it's proportional to the account. So what does that mean? The beginning statement of the lot size being a proportion that dictates how much you're going to win or lose is 100% true. We've proven that to be correct now. We've proven that to be correct now. So 100 pips, let's just entertain the rest, times 50 cents a pip. $50. How about 270 pips times 50 cents? $135. 400 pips times 50 cents is $200. That's for a $500 account. Do you guys understand what I'm trying to say? The more money you have, the higher these dollar amounts will be. But have the pips changed? Yes or no? No, they haven't. They haven't. So now you understand risk management. Risk management is all about these 3 steps in the beginning that we went over. That's all we went over. Lot size and allocation, risk and reward in pips, which we calculated, and the dollars won or lost. This is a crash course on how to properly enter a trade alert using good risk management. I want y'all to prioritize this more than anything, because once you understand this, you can learn everything and now be confident that you will manage it the right way. Do not over leverage. Do not trade more than you have to. There's a lot more to learn. This all comes from the university and Market Pro. Okay, this is what makes a good trader versus an amazing trader. This is what makes a bad trader versus a, really bad trader. So again, you want to make sure that you know this, because the more you know it, the better you're going to be, the safer you're going to be. And at the end of the day, I'm not responsible for your money. iGenius isn't responsible for your money. You're responsible for your money. We just do our part to teach you guys what to do to make the right decisions. So if you blow accounts, it's totally on you. It just means you ignore the information. You guys are paying, whether it's Elite, Premium, Select. You guys have those memberships and they have all the tools accessible to you. So you guys have everything at your fingertips, right? That's all you got to do is just really, all you got to do is just focus and learn. So does anyone have any questions about that? Does anyone have any questions? Feel free to ask. We have another meeting next Wednesday. It won't be me. So every Wednesday we have a different trainer. Feel free to ask me questions, you guys. You guys know where to find me in the chats if you guys have any questions afterwards. Every week we have a different trainer who adds a whole other elements of what they do. They'll teach different things. But yeah, we'll have another meeting next Tuesday. Sorry, next Tuesday with, I'm not sure who it is yet, but we'll find out. It'll be announced. What is the name for the YouTube channel where we can search it up? It's GC Champions. The GC Champions YouTube channel, you will find all of the recordings of these Champions University calls and the level up calls. Any calls that we have that are for the team will be there. Platinum Executive Plus trainings are never there. So if you're platinum, you only get those for you. Okay. And Julia needs to learn this again. Yeah, I mean, hey, definitely. Go into the university, go into Market Pro, look at it back. It's like, when you watch a movie once, you watch it again, you're like, oh, I get it. Yeah, I see that he was the killer all along. That makes sense. So that's pretty much how this is gonna go too. I missed that on the first call. Good. I'm glad that you came back. See, look, you dedicated more time. I know you can't sleep, but hopefully you'll sleep after this. And you'll sleep knowing that you learned a lot. All right. Thank you. It's like Interstellar. Yeah, that's like my favorite movie of all time. Interstellar. Cool. So that being said, guys, it was good being here. Stay tuned for more. The journey here. I'm excited to show you guys more about this move and all that kind of stuff. It's gonna be really fun. But yeah, that's all I have for you guys. So we'll see you in the next one. And as always, take care and peace.